Thank you, Mark. It's an honor to be here today. EEP Africa, we are a multi-donor fund. We're funded by the governments of Austria, Denmark, Iceland, Finland, Nordic Development Fund, as well as the governments of Norway and Switzerland. To date, we have deployed about 60 million euros of grant financing as well as repair grants, which are the two instruments we use to invest in early stage investments. And we are focusing on 17 countries on the continent in East and Southern Africa, with ticket sizes of up to 500,000 euros for grants and can go up to 1 million euros for repair grants, which is interest-free loans to early stage companies. And what has been exciting about this fund, we've been around for about 14 years now. We have backed about 300 companies in the climate tech space with all types of technology and really making sure that we are responding to the needs and the growth of the sector. So a lot of work in the solar home system space at the very beginning, the likes of the D-lights, and then at the moment really looking at electric mobility with a growing portfolio, as well as productive use appliances, and in a lot of ways really reflecting agricultural climate tech ventures that continue to be the largest of our portfolio. And on the continent, as agriculture continues to be a large contributor to our GDP, a lot of innovations from that end. So as a grant funder, and we've talked about this today and yesterday, we really are at that very early stage where we help the companies as they go through that valley of death. We not only provide capital, but we go over and above that to provide them with business development support. And as we discussed yesterday, that gets very expensive, especially if you want to access very good consultants who can help them with their financial models and their decks. And so what we do is we have partnered with Open Capital, who you saw here yesterday, and they continue to support our portfolio companies to be able to get the resources they need to fine-tune their models, to fine-tune their business case. And in a lot of situations, what we find is that the local companies and the women-led companies who continue to be left behind lack the skills to be able to really communicate what it is that they are doing in a language that is understandable and aligns to the lingo that we use as investors. So really helping these companies at the end of the 2 years that they have gotten funding from us to get to a stage where they are de-risked, they are bankable, but more importantly that they are able to communicate what it is they're providing, the value proposition, clearly the business model and what is innovative about it. And then from there, we're then able to collaborate with investors such as Opes and KCB, who then follow on with equity financing or debt financing. And what we see then is the success looking like getting these companies to be able to walk through that journey of being able to raise different types of capital and walk through that financial continuum to a stage where they're able to raise a Series B at a much faster rate than what we see as, I believe the data says about 6 years between founding and raising a Series B, which is a lot of time. The local company is really innovate around the biggest challenge, which is the utilization of the CapEx, basically the cold storage units, which are very expensive. And so what they do is they will have these cold storage units at the farm gate, which continues to be a very left behind sector and value chain node in cooling, and then will get these cold storage units in a way that they are basically, you can just hook them on a truck, move them across the country as you need to, and take advantage of seasonality. So if it is avocado season or mango season, then there's high utilization of cold storage units. Now, what has been successful about this company is that they have, to date, served over 5,000 smallholder farmers. Over and above that, they have created 50 direct jobs, and this company is only 5 years old. They are locally led and have been able to raise subsequent financing. And one of the key challenges that climate tech ventures do face is the lack of blended financing. We discussed this as well as the need for debt financing. That remains to be a very big challenge. And so this company has been able to unlock, after our EEP financing, they were able to unlock Safaricom financing in equity from SPAC Fund. Thereafter, they have been able to raise equity from Acumen. They have also been able to raise some really innovative and interesting debt financing from a Mauritius bank. And how they've been able to do this, we continue to see especially local entrepreneurs, need to be innovative in the way that they structure their funds and their fundraising strategies. He set up an SPV where all the assets are now off their balance sheet in an SPV, so they're able to attract more debt financing. And one of the key challenges our companies continue to face is the lack of enough debt, and then because it's too expensive to finance a lot of these capital-intensive companies using equity, and then also a lot of VC firms still want to see the high growth. There's a reason why fintech has been leading, and e-commerce as the largest uptakers of the financing. So there is definitely more need for investors to continue dipping their toes and continue learning and to continue getting sources of financing that are, especially venture debt, that are just more patient. Another challenge, last one, Mark, that our companies continue to face is that 40% of our portfolio is women-led, and local women entrepreneurs, first and foremost, women entrepreneurs, as of data by the Big Deal last year, only raised 2% of financing on the continent. That continues to be a big challenge. Why is this the case? We continue to ask ourselves. It is not that there is no pipeline to a large extent. We have 40% of our portfolio companies are being women-led. And what has surprised me the most over the last 5 years in this role is that actually, especially for not the big four, but the other smaller countries like Tanzania and Uganda, these women-led local companies are getting financing from banks. And as the keynote address speaker rightly said, our local companies and our women companies continue to work for banks. But somehow they make those business models work with less profit. And so what we're doing is, for where in most of these countries, Tanzania, Uganda, even worse in Mozambique, where the interest rates are 40%, it's first step, come in, replace that with investors, venture debt, who are more patient, better interest rates, like the Opes, like the charming packs, and then we see these companies begin to have more profitable business models, and then that unlocks thereafter equity investment. And then the other thing, and a call for action as I finish from my end and where I see it, is there is still need to continue and very aggressively diversify our teams, our management teams, our investment committees, and unless these are diversified enough in terms of gender and in terms of having representation of local people in the countries we do operate in, there is still a very large population that we continue to leave behind. So call for action to continue really pressing for that diversity among our funds.
I think she deserves it, the team as well. Round of applause. The impact that we've done. Social Fresh just being one of the examples, and thank you for that. And you've mentioned Opes-LCEF. You also invest, who also invest in the same space. You are in clean energy, they're in energy, sanitation, access to water. And I want to get it, as Aarthi, you respond to this, to the thought process about balancing the various, because you are at an intersection of balancing the social inequalities as well as also impact and sustainable impact perhaps in agriculture. How do you balance those interests in your line of investment to ensure that this is catered for?
Thank you so much, Mark. I think specifically with Opes, where we come in is just after companies have raised the initial grant financing. We typically provide low interest rate loans or impact-linked equity instruments or other kinds of innovative financing instruments just before the companies go on to raise more commercial debt. Because we are an impact investor, we typically look at impact goals along with financial goals for these companies. We have come up with a couple of different investment instruments which sort of align both the impact and the financial objectives. So we came up with an impact-linked loan where we found that identifying top 5 key impact and gender matrices, which are in the case of an equity instrument, or it can be an option to redeem your equity, and in the case of a redeemable equity instrument. So what we are trying to do is we don't look at an investment where the investment is an equity or a loan instrument and we just end up measuring impact objectives at the end of each year through the loan period, but we try and understand how we can integrate both in the form of providing such objectives. And of course, we try to identify gaps at the time of diligence to understand where we can offer support to each of these companies. So these supports can be in the form of external expert advice to the company in certain areas that they really need, and it can be in the form of identifying areas where they need hiring support. It can be in the form of identifying data management, data evaluation support. So they're very specific support which is both impact and financially aligned to the company's overall business goals.
Thank you for that, Aarthi. And as you can tell, perhaps just giving you an opportunity to get a feel of, with their respective working spaces, what their expertise and experience is. And if you have shared experience or even a question towards what they are responding to after this first round of questions, I'd like to throw it to the audience just to give more interaction for that. And Charles, as you can tell as well, this is an ecosystem, an environment, and you work a lot together. And perhaps it will inform how we arrange the panel, because from what you respond, we will hear how it is that she has benefited from exotic EPZ. And just to understand, the same line of questioning and understanding of your thought process based on your interest areas, whether it's on energy, whether it's on sanitation, whether it's on circulatory environment with the investment in forestry space, what KCV prioritizes. She's mentioned some matrices in their line of thinking, but how you prioritize the investment-ready opportunities from KCV's standpoint.
Thank you for the question, Mark. So, KCV, we are proudly a local impact investment company, genderless. So we are de-risking small, medium enterprises on the early and growth stage. Basically, we are focused on the green sectors, that is renewable energy and clean cooking, water and waste circularity. We also focus in agribusiness. We also focus in commercial agroforestry, and we have a cross-cutting theme of financial institutions that are supporting all these other sectors that we're investing in. So again, at Kenya Climate Ventures, we offer technical assistance to these early stage and growth stage businesses to be able to build their capacity to scale up and become greater companies that can grow. To put in the context of this question on how do we filter the deals that come to us based on the green sector that you're focused in. So preliminary, KCV has got 4 things that we check on immediately we get a deal. Number 1, we check on first is the impact, the potential impact that we're trying to derive from this potential deal that has been brought to us. Number 2, we check on the additionality in terms of the business model in investment in our portfolio. And then we check on the sector aligned. I've mentioned the 5 sectors that we invest in. So the deal that brought to us, first of all, we see that it has to be sure that it's in the 5 sectors that we are investing. Again, we have to look at the economic units and see whether the business model, the innovation is capable of being scaled. So at the preliminary level, we check on those 3 things to be able to identify whether this deal that has been brought to us aligned to us. Second thing is that KCV, we are a post-revenue investment company. So an SME can be probably investment terms a negative EBITDA, but already they are making some revenues that you can check on. So we'll take them through the assessment of their financial capacity, management capacity, we look at the legal capacity, so that they can be able to understand where are the other weaknesses. So all this information is what we put together to help us now structure an instrument that is suitable for the SME. Information put together is what, as KCV, we analyze together and be able now to evaluate and say, this is the right business model or this is the innovation that we're able to support in the business growth. Thank you, Mark.
Started with that, and you're seated next to someone who's the direct beneficiary of that capacity building and investment. Jane, as the leader of Exotic EPZ, ladies and gentlemen, I'm seated to one of the leading ladies within the region in the women-led agribusiness space. So let's give a hand to her before she even speaks. Not to embarrass you, but these are accolades that you have received recently, and it is to your merit, based on the work that you have done. But based on that, you've received an accolade because you have succumbed or you've gone over some challenges. So speak to that as a woman business leader, the challenges that you've come over and that you've faced to be able to have impact. First of all, in your space, social impact, and to scale.
Thank you very much. So Exotic EPZ is the company that I co-founded together with two other ladies. I like to mention this because it's the only company that is 100% solely women-owned in the processing and export space for macadamia nuts. In Kenya, and I suspect in East Africa. But that notwithstanding, we are a mission-driven company. We are based quite close here, 10 minutes away, Samia Industrial Park. We are licensed to process macadamia nuts and oils, and we've been doing so for the last 6.5 years. Our success is definitely riding on the shoulders of partners, many ecosystem partners, and one of those is KCV. That we have partnered for the last, since 2020, actually the conversations started in 2019. But before we get to the partnerships, your question to me was the challenges that we have faced in running a business that's unique to women, but also unique to enterprises. I like to usually talk about challenges against opportunities as well. So allow me to mention just what led us into all this. So the opportunities that are there, that have been there for us, is that there is a vast growing market internationally for agricultural products, high quality or good quality, food safe agricultural products, thanks to the rising world populations, and especially those that are very sensitive, not sensitive, but raising awareness on healthy foods and healthy lifestyle. And so companies like ourselves, this market presents us an opportunity as quality-driven agro businesses. The other thing is that there's a lot of support for women entrepreneurs that is available in terms of technical assistances that we are all talking about, in terms of grants, mentorships, networking opportunities, and all of this. The third one I would like to mention is the opportunity to create impact, to participate in addressing the social challenges that we are all facing. And this is what Exotic was set up for. The changing and dynamic markets and business environment, internationally and locally. You'll agree with me that we have had so much happening in the world, thanks to wars, thanks to diseases, COVID and many others, thanks to the positive side of it, the negotiated trade agreements that are there. All of those are things that create certain shifts that present good and bad. So there has been lots of challenges in terms of inflation changes, inflation hitting businesses like ours really hard. Some of those that are not actually foreseen in the dimensions that they come with. Disruptions in supply chains. If you look at a year like COVID year 2020, it hit us so hard that we almost succumbed. I like the word you almost used, succumbed. We almost succumbed to it, just 2 years into having formed a business. But thanks to ecosystem partners, thanks to you people that are in the room, and thanks to KCV representing many of you, that the timeliness of coming in with certain investments and certain support helps the lifting of the ground once again. And of course, thanks to our own resilience to be able to stick our head into it. So the changing markets, the fluctuations, the inflation, the dollar changes, all of those are big, big challenges that we face even currently. And easily can send a business that has been growing steadily like ours up in smoke. Getting stuck on the roads or getting hit on the roads. So we will normally not be in production. Those are disruptions to deliveries of product. and customer orders. We really, one of our competitive advantages has been delivery times. We are really, really keen on delivery times of our shipment. And disruptions such as those I've mentioned will definitely disrupt our business. Disruptions like internationally, I don't know how many of you know that shipping, it has become a big challenge. The shipping lines cannot transverse the routes that they have always traversed because there's some people somewhere, the Houthis, who are responding to the Israeli war and are attacking ships. And so the vessels have to take a longer route and they get stuck, before they can come back. That's a very live challenge that a business like ours face. But of course, there are other challenges like finance, access to finance. Being a woman, for example, when I was starting this business, collateral is one thing everybody will be asking. How are we going to secure our loans? How are we going to secure? That's the first thing that is on the list. You will win on all those other things, the projections and, the markets and everything is looking good, strong management, but then how are we going to secure this risk? And I can tell you, I did not have property when I was starting this business. Neither do I really have. Most of the properties that women will have are joint properties with their husbands. I'm married. And many of them, my partners, they're younger than me. I'm probably the older one. One of them is youth. And so properties was an issue in terms of being able to secure the kind of loans and investments we were looking for. So that remains an issue. But also the permutation and combination of the financing instruments that are there, there's a lot of improvement in that landscape. But there's still a lot of room to get better because, let me not go deep into that because of time. I'll mention the other challenge, the challenge that has to do with culture and perception. I'll give you a little story. When I was starting the business, one of the things we needed to acquire is to lease a facility. And we met this managing director of the company that was leasing the facility. We wanted the warehouse. And just walking through the door, you could see the face. You could hear the kind of intonations in the discussion. Oh, I can see where this conversation is going. It's like, give me the bank statements. Are you really going to, because it was a startup, are you going to manage to pay, the kind of lease that is going to be needed by this business? I could see there was a gender dynamic over there because I wasn't really convincing by how I walked in. Anyway, maybe it's in my mind, but I think I saw that. But just the skepticism that whether this business can consume the kind of capital it's asking for, being a woman, I have seen that. Then the last one, in terms of challenge, is, and it's related to culture and gender, is balancing roles. Women, we have roles, and some people think that we are nagging, we're complaining. No, that's the exact thing that is happening. Many of you have women in the house or you're a woman yourself. You know the things that you do when you wake up and before you sleep, you're sleeping after everybody, and you have to run international business over here. So balancing roles of family, of business demands, and the need to network. How much can I go networking? At what time do I go networking to be able to clinch those deals? That is obviously one of the challenges that a woman, that is related to woman enterprise. That's very unique to us. And I can tell you, as I said, I'm mission driven. So one of the things I look to do is even to support the women that work for my business. Exotic is employing 150 people. 85% of those are women, 75% of those are youth. So with 85% women working in the business, there's so many aspects that we ought to have gender lens to be able to support these women. Thankfully, we're women. So one of the things, for example, we're doing is we are investing in lactation suits, for example. I've seen women who have gone into maternity time that they're struggling with how to deal with the aspect of breastfeeding or expressing their milk at workplace. And that, of course, impacts on productivity. But primarily, I want to ensure that I'm promoting work that is decent, work that people can enjoy working, work that they're not struggling to come to work, that they're neglecting why they're working there. So there are many, many programs. I won't speak about them, but we have programs that we're setting up to ensure that there is decent work, that gender equity is addressed, and these barriers that we ourselves as business leaders are facing can be a bit lighter also for our staff. So I'll leave it there. There are many.
And thank you, Jane. Would you look at that? We're 30 minutes in, and I'd like to now give an opportunity for people to start asking questions. You can pop your hand up. We'll bring a microphone opportunity. There's a hand up here. Please, if you could get a microphone to her and identify the...
My questions to the two ladies, especially on the funding. You mentioned that women receive 2% of funding within Africa. And my question is that, especially in the South African context, most of the women-led SMEs are female solopreneurs. And they tend to be overlooked because I think we measure success and growth in their ability to hire more people. But a lot of the female solopreneurs choose to stay solopreneurs for the flexibility that was mentioned, in the sense that they're able to balance both roles. Now, what can we do with an
initiative that I believe is doing some work in relation to that in Kenya and the way they're approaching this? So I believe a part of why we see a lot of solo entrepreneurs, and especially solo female entrepreneurs over and above what Jane has mentioned, rightfully from my experience, on the continent, and not as much of that. I think when you look at the US and Europe, there's more three, so you need the finance person, you'll see a CTO, and then you'll have somebody else leading on the business aspect, right? So all the areas of the business are covered. But if you look at the number of venture studios that exist in those markets in comparison to the continent, there's just less and less of support with the very early stages of venture development. Delta 40, for example, in Kenya, is doing amazing work with especially targeting African entrepreneurs and trying to build that pipeline of locally led ventures. And what they're doing is then partnering them with founders that have the expertise that they need to be able to build organizations that have at least all aspects of the business taken care of at the founder level. Antler is doing the same, but there are only a couple of those doing that on the continent. What are we doing to see that a lot of these solo founders do get to have other co-founders in the future? Most of these companies, when they apply for grants, for example, from where I sit, what you see is very low salary allocations to themselves. They also, CFOs are expensive to hire, but then how do we complement that? I know Google is doing amazing work with supporting local entrepreneurs and getting them the support they need with their financials, so outsourcing as much of this until they can get to a stage where they're able to raise rounds that can afford CFOs and can afford other founders that would normally be expensive. Get investors also doing amazing work with supporting these companies and basically complementing this, and get investors interested because they're actually concessional financing, so they're funded by governments. And so we're seeing a lot of DFI financing already flowing into the continent to really complement that as we get these companies to rounds where they're able to get co-founders on board. And I believe as there is Series A rounds, you really can't build a business that is scaling across different countries across the continent without those key multiple founders. And the diversity there also, with bringing in more international and different people from different parts of the continent. I think we've seen at the moment, the advantage I hope is that a lot of these companies will get a foreigner on board who will lead on the fundraising, and that has unlocked financing. But hopefully as we go along, we begin to see more of this happening at an earlier stage, but at this stage I would say it's happening at the seed and Series A stage.
Jane?
In terms of the funding and other types of support and investments, to female-led businesses, and of course, I've already alluded to the fact that female, by DNA, the way we structure this, we're very interested in impact. I'm not saying men are not. That's not the thing. But in terms of, if I could give an example, as our business, we have seen different types of investments and supports that have come to address certain aspects, and this space for everything. For example, we talk about the value of debt. That the investments that are going to help the business come out of the value of debt. There are times that businesses at early stages, and sometimes even in the middle, had enough value of debt. And for example, at Sojek, we faced that value of debt in the COVID year 2020, and that's exactly the timing that KCV came in, and there was also others. There was USAID that gave us a COVID relief grant. We were not able to sell. Our sales reduced by 60%, and in fact they came in so late. We had 9 months of no business, January all the way to September, and we have operations to run, we have overheads to run, and so it had reached a point where we could actually not pay salaries. to people, not ourselves, even to the rest of the people. So we got some grant from USAID, and we were able to, that was very focused on support for 3 months for salaries, for workforce, because we had secured orders, but we could not supply those orders in the last quarter of the year because we could not pay those salaries at that point. And there was no financial at that point yet that was willing to look at the business because of the struggles it was in, the kind of financials it had. Then KCV came in. We were in discussion since 2019, late 2019, and 2020 they were able to put in a convertible note, of course a larger amount than the grant, that was able to it's patient capital, really, that was able to help us to stabilize our business and expand our operations, to be able to start scaling up. And I usually say, some of these investments, we could not be there had they not come in. So there's a lot of additionality. The business was actually almost shutting, but just some investments that came in the right timing. And I like to have everybody hear about the timing, because it's very important to talk about timing. This is able to give a pivot for the business to grow, the female-led businesses. Remember, we don't have the title deeds. Remember, we're not having those assets that match the kind of investments that are needed. Then thirdly, I'll talk about the technical assistances, the capacity building. Definitely this is needed for any business, much more so for female-led businesses. I do a lot of mentorship and training because I like to share the experiences with others. That's a legacy you can leave, to other women and lift them up, and other men as well, entrepreneurs that are coming up. So KCB, for example, was able to support us with consultants for specific things. We are very interested in sustainability in all dimensions, as ways of improving our environment, planet Earth, but also as a way to deal with costs. We talked about solar. Somebody talked about solar energy being one field where jobs will be created. So there was opportunity to replace or at least contribute to reduction of usage of mainstream electricity. And so with KCB's energy consultant, who helped us to do energy audits, they can be expensive. We were able to do that. He made the recommendations, and we were able to take on those recommendations. And we, ourselves as a company, invested in solar energy. Of course, we look for partnerships to help us set up solar energy. So right now we have a solar generating power unit that is complementing 20% of our electricity needs. It's industrial power, and we're able also to track the carbon. Through the company that is working with us, we can tell month by month how much carbon are we sinking by using solar energy. That is really good because we like to measure what we are doing. Of course, there are many other consultants we've had through, for example, KCV. We have had HR consultants. So the hand-holding he was talking about is we reach out our hand and they bring their hand. We identify our own needs. We do our own self-assessment. Just what we need, we reach out, and they reach theirs out. And we work out something that gives additionality to the business. Just to add, so in terms of women-led support that as KCB we are providing, is that we have set up a platform called InvestLink. So the InvestLink is a platform that we're trying to also use to build our pipeline, but we're deliberate on the women founders that come to join our InvestLink platform, where we connect them now with other potential investors. And through there, we also pick potential women that probably we can start providing early TA before we invest with them, and we also work with them to be able to look for other investors that are willing and ready to support the investment. So through the investing platform, KCB is deliberate about supporting women-led businesses, and we encourage ladies who are in business that can be able to now to access the portal of the InvestLink to be able to you log in there, we'll see your business, we do our basic filtration, and then from there now we start mapping you with the potential investors that are able to and are willing to work with women in that area.
Thank you, Charles.
Mark, just allow me to say that in the Valley of Death, Opes is here, so it would only be fair enough to say, of course, Opes as well participated in the 2020 rescue from the Valley of Death for exotic EPC.
So as I mentioned earlier, we are donor funded, so to a large extent the governments that provide financing to us do influence the countries we move to. Why? I think first and foremost Nigeria would absorb all our small 50 million. So we only need to dedicate our financing to Nigeria. And also, I think for the longest time looking at climate change and looking at the climate sector, and when we came in 2010, solar was just taking off or beginning, and East Africa was buzzing at that point. So then, if we were going to really be investing in solar home system companies, majority of this were here in Kenya and East African region. Then, of course, the South makes sense. The West is also a mix of French-speaking and English-speaking, and we still, as the continent lacks the financing to follow on, so that continues to be a challenge. We just recently expanded to Madagascar and also Comoros, so we're looking at other markets like Ghana to deeper into West Africa, then gradually to Nigeria as we get more funding. But we are moving and expanding, and over the 14 years there has been gradual growth, so looking to go to West Africa, especially as we see e-mobility, for example, as a growing portfolio, really growing in the West as well. But even when we are not there, what we've seen is our portfolio companies, after we've invested in them, they will naturally expand to those markets, so they still impact and growth through them.
Thank you for that. It is in the name of the ensuring that gender equity is kept and embedded within the investment cycle. If you could explain how Opes-LCEF and other funders or funds ensure that is within the cycle from identification to portfolio management.
So, there are different impact measures with which different funds operate, right? Opes specifically looks at expanding capital availability to women-led enterprises. So what we identified as gender equity starts at the top. We have seen that when funding women entrepreneurs, a lot of times gender equity percolates down the value chain within their company. They go above and beyond in identifying women managers, women middle staff, and promoting employment across indirect and direct jobs within their companies and within their value chains. So what we started off was to provide capital to those women early stage entrepreneurs. And then we started understanding how to identify gender-led gaps within the value chain through these women entrepreneurs. And again, these are very entrepreneur-led. We try and refrain from being overbearing investors and saying, we need you to create so many jobs here, we need you to look at women's equity development here. Rather than making it very prescriptive, we try and understand what gaps the entrepreneurs face themselves and try and incorporate gender in those gaps. So we identify these gaps. It could be suppliers to the organizations, it could be customers of the organizations, it could be within the organizations. And what we do also is to sort of enable the intent of these women entrepreneurs in driving gender equity. We help with policies and procedures. So we do not tell them, why don't you do this? We sort of help them in